want to try to do it from a bit of a presentation stance and talk about the real-time revaluation of gold and Bitcoin, starting off with it's gradually, not suddenly, right? In the past, we've talked about this as far as even yesterday, looking at what happened in, 1930, through that decade, and looking at the historical overnight devaluations or repricings. And today, what we're seeing between gold and Bitcoin is a continuous market driven process. Open market versus government, right? We saw a previous route, 1933 gold confiscation. They first made it illegal to own gold. You were able to turn it in and get $20 an ounce. And then overnight, they repriced it. And then again in 1971, when Nixon, stopped backing the US dollar by the gold, you began to see that rapid price appreciation as well. Now the revaluation is occurring in 24/7 markets outside official decrease. And it's not as if they're not official as well. I mean, the signaling that we're seeing from the current administration could not be any louder or clearer. We're seeing gold and Basel III, where banks are now able to keep gold on their balance sheets and for it to be counted as money. And we're also seeing with Bitcoin, obviously, the massive clarity and opening up of the markets. You're looking at now Bitcoin being able to be used in retirement accounts, for banks to be able to hold it. You're seeing a massive, massive, massive transformation. We were so early. Rising government deficits, fiscal dominance, and unsustainable debt fuel skepticism of fiat currencies. There's one certainty, and that's that all fiat in the end is going to zero. We've looked at the projections, U.S. government projections of what they expect by 2050 for government debt to be, and it's astronomical, and they always underestimate. There's no question that the rising government deficits have turned the corner, right? Now, whether or not this is like it, to me, it's like a slow motion debt spiral, in so much as that these things take out a lot longer to play out than most people perceive. A lot of people have been calling for the death of the dollar since the 1980s. Where you remember, if you guys remember, the dollar vigilante, and for the last 25 years calling for the death of the dollar. And one could say, well, the BRICS are here now, and I could say, well, what share of global trade do they make up? No, the dollar is dominant. The dollar continues to be the world reserve currency, but the dollar continues to devalue. And when you look at things like the price of real estate, say, well, it's not the price of real estate is appreciating. It's actually devaluation of the fiat that's occurring. People are becoming more and more drawn to hard assets. I have friends who are like, how do I buy gold all the time now? You did not see this occurring years ago whatsoever. Same thing with Bitcoin. A lot of more normal people are saying and realizing the importance of Bitcoin and the role it plays. Investors seek safe havens, gold and Bitcoin, as trust shifts. It's happening everywhere and to everyone. Gold and Bitcoin price just in real times as millions of participants globally reassess risk, currency strength, and it's also happening in stocks, I do believe, and equities and stocks, and specifically tech stocks. They play a role in how we look to execute in the markets. We believe that the most highly probable candidates here to perform the best against fiat is obviously Bitcoin and select crypto, and the same thing with select tech stocks. And the question earlier was, what about silver futures? And I pointed out on that breakout in March of 2023, as we broke above 2000, I said to everyone, listen, I know most people that I deal with and I know are very much into Bitcoin and crypto and understand that market very well. But the thing about futures is the leverage involved. Like one gold future contract controls 100 ounces, and I would say that like what is it like a $50 move is a $5,000 move per contract. So the amount of leverage that could be utilized in the future markets, whether it's on gold or silver, does it make sense? And I'm not saying up here. I mean, gold for me is continues to be overbought, right? And it's funny because if you remember on gold, and I think we did a really good job calling that breakdown as it occurred, but prices just flat since. I mean, yes, there was a drawdown. I guess what I'm getting at is I don't. I mean, when it comes to leverage, the last thing I want to do in any way, shape, or form is kind of promote it because it's extremely dangerous. I've seen so many people. I don't think abuse it. I just think not understand the magnitude of the tool they were dealing with, and it wound up really, really whipping them really badly. And the gains that we are able to produce methodically and consistently in the markets, they are with no leverage whatsoever, and no leverage is needed. Does it make sense in this regime to have a small paper position on in Bitcoin and gold? And up here the place to put it. But I mean, what same thing with Bitcoin? 55,000 is cheap. People didn't understand it at the time, and now everyone understands it. I mean, do you ultimately think, or do I ultimately think that there will be a time within the next couple of years, that, the gold looks cheap at 3,400? I believe that. I embrace that. I strongly believe that. As far as timing, though, but it had a rather large sell off yesterday and closed at the lows, so it just gapped up a little bit. I'm looking here at FNGU holding an open position -3% into profit. Everything else is into profit with T Triple Q leading the way at 30%, followed by Nvidia at 18%. Then we're looking at IBIT 7% and MicroStrategy giving back a lot of gains here now, just under 3%. And Tesla also showing some relative strength today over at 3%. And we are holding these open positions, and we're holding them into a period where we're a little bit uncertain about what comes next. And I point to the seasonalities, and for sure we could enter into some chop area. If we don't, if we're entering into a period that you would believe has a flat to choppy sideways price action, and we continue to show relative strength, that's just a read we could take away from the market. It's really beautiful. All right, let's jump back. Let's continue. Let's get the conversation going. And as we do, like, come on, everyone, show some love. I'm glad you're here, bringing the good vibe in the morning. Hit the like button, though, especially if you are here right now on the live. And what I want to get into today is, at this particular point in time, the theme of today's session, and that is the real-time revaluation of gold and silver. And it has a lot to do with yesterday's conversation. Yesterday's conversation had a lot to do with the move towards fiscal dominance, taking precedence over monetary policy. And we talked about, or I've talked about in the past, a place that I begin to get bullish on gold is when the Fed begins hiking rates. And the reason for that is because as the Fed begins to engineer a slowdown, which is what they're doing when they begin hiking rates, is that eventually you do see the slowdown come to fruition, and then that's like gold time to shine, right? During that particular period. And sure enough, we're right on time once again. We called the super cycle gold breakout in March of 2023, And actually, it wasn't such a good call. And I will not make that mistake again. Jordan, what are you talking about? Gold is up immensely since then. Yeah, but we did call the breakout from the cup and handle right on time. But this is when disinflationary pressures finally began to take that paramount dominance. And once that happened is really when gold began to shine. And that's when someone missed it. Just go to the YouTube and search gold. And then you'll find the video that we did with the breakout of the cup and handle.